We'll stay with markets. Our big market voice today is Rajat Jain, Chief Investment Officer with Principal AMC. Rajat, good morning. Thank you for joining us. Rajat, whereas most of the fundamental market watchers are of the view that this market is priced to perfection, the underlying momentum is just not, baiting. Is it all about liquidity or something which markets know, which majority is not able to see today?
If we just look back at 2017 as to why the markets did the way they did, Indian markets have done what the global markets have done. If you look at MSCI India performance, it's exactly been what MSCI emerging markets index has done, give or take a percentage or so. So it's been global liquidity rally, liquidity rally globally, and in India particularly domestic flows. Having said that, we did see in the second quarter number sort of bottoming out of the earnings, as in earnings upgraded, marginally upgraded. We didn't see further deterioration post the Q2 earnings. So hopefully earnings will come back in the Q3 and more so in FY19. That's one. Certainly we see fund flows remaining strong, but having said that, I think calendar 18 will not be as strong a year, we think, as CY17 was. The markets did go very sharply. However, while macro looks stable, things are improving at the margin, but there are unlikely to see very many positive surprises, as it were. So probably more of an average year 2018, I think.
In that sense, Rajat, for people who are still sitting with that left out feeling in the market and haven't really participated fully in the market in 2017, what should they do? What should their investment strategy be?
So I think, equity is always, medium to long term story. I think we all know that because, in the near term it will be volatile, it will be choppy. So probably once you do get those opportunities, the markets do correct, given any news flow, any event, it's possible that the markets could correct because the markets are not cheap. And I think certainly we see flows coming in. I think our sense is that people, right from when the Nifty was, say, 9,000 or even below 9,000, people have been somewhat cautious, and there's certainly a feeling of being left out. So we don't see the markets correcting dramatically, simply because there's a lot of money on the side, substantial money on the sidelines, which should come into the markets if the markets were to correct. So we don't see a deep correction or certainly a prolonged correction. It could be a sharp correction, but probably as monies come back in. Because having said that, we did say fundamentals are not deteriorating, we are stable, earnings should come in, but the street expects all those things. So we don't see a great run in 2018, but if the markets were to correct, I think money in the sidelines will come in, should come in.
And when those dips come, Rajat, what will be bought first? Would it continue to be within large caps, the Marutis and HDFC banks of the world, or do you sense and scout newer opportunities in the index names?
18 will be a very, very bottom up stock picking sort of a year, even more so, I think, because markets, I think, as Nikun said earlier, are not cheap. You have to pick individual stocks. So there are no broad themes probably for 2018. So across large cap, across mid caps, actually, even although mid caps have rallied, there are a certain number of stocks where I think earnings surprises of FY19 can still surprise positively the markets. So I think select mid caps also. So across both large caps and mid caps, and even sectors, for example, which didn't do very well in 17, for example, say IT. So if you do, global economy is doing well, US economy is doing well. Rupee has strengthened already. We do not see rupee strengthening further from these levels. So I think even selectively, even IT sectors could be selectively, I think there can be a space for IT stocks as well. It's a very, very bottom up stock picking sort of a year for 2018, I think.
Rajat, what's the call from a market standpoint on what the budget could do for the market? Do you think that this rally will continue up till budget date and then, decide on course post that event? Because it's really, riding on the expectations that this time the budget would deliver more than promised.
Yeah, budget is the next big event, is the premier event that you would look forward to now. Of course, we'll have Q3 earnings by then, but we don't see major surprises in that, positive surprises. So budget is going to be key event, and I think the consensus on the street is that it will be certainly more rural focus, which I think is fair. I mean, rural areas have had stress in the past on account of delayed poor monsoons, and I mean there is terms of trade for the rural areas have been adverse. So I think there is certainly a case for more rural spending, and does benefit a segment of the population, certainly a large segment of the population. But I think so. I mean, of course, next year is the election year, so this is the main budget they will have. So I mean, these are guessing games, so it's difficult to say as to what micro level things to anticipate, steps to anticipate in the budget. But I think certainly the big theme would be more rural spend, more infra. I think that's one area the government has done a lot on. I think certainly a continuous focus on infra, which actually has a lot of effects across the economy. So these I think will be positive things for the economy as a whole.
What could derail this cozy scenario? Will it be something global? Will it be something on the taxation front? Because Rajat, let's be real. I mean, we both have tracked markets for enough, and we know that equity markets cannot go in a straight line. It could be 10% correction, it could be a 15% correction, 21% correction, both you and me don't know. But a correction should come, and we know a correction could come anytime.
Yeah, it's possible. I think could be, because I think the biggest risk in the market, if you ask me, is complacency. It's not so much from, it's really markets, and that's because led by events the last 2 years, 2.5 years, if you see. We had globally, we had the Brexit, we had Trump election, so many events, frankly, and the markets just, walk past them. So market thinks nothing can shake the market, which I think is the biggest risk the market has. Complacency level is very, very high, and we are seeing certainly rise in global yields. We are seeing the beginnings of an inflation. We don't know how fast it's going to go within India. So there are those things which can certainly come into play. So exactly, any event can. I mean, these are events are surprises by definition, right? So you could have a surprise, but if the surprise were to happen, would it be a permanent damage? We don't think so. Simply because the point we made earlier, there is money on the sidelines waiting to come into the markets, money which has been feeling left behind, and Indian markets are not deteriorating. Fundamentals are not getting worse. We are stable. I mean, we have run up, but we are stable at these levels. Earnings should begin to look up more in FY19. So overall, I think fund flows should remain in the markets, but certainly a surprise can't be ruled out.
You do talk about, Rajat, bottom-up stories, and to my mind, aside of IT and maybe, sporadically pharmaceuticals, telecom has been that one pack. And, now one is seeing heightened news flow when it comes to telecom, besides speculation that Jio may be bidding for Arcom, perhaps. You've got the 2G scam verdict coming in today. There is buzz that the government may be allowing 100% FDI in telecom via the automatic route. And then, of course, there's, a build up in Bharti, some extremely strong news flow coming in from the African operations, which they highlighted in their Africa analyst meet as well. The Tanzanian government has now claimed ownership of Bharti's local unit as well. Would you say the telecom could be a sector to look out for?
Yeah, I mean, we have seen already telecom do well. I mean, in 17, I think stocks have rallied about 60-70% from the lows, if probably even slightly better from the lows if you were to see towards the high of the year. And I think that's led by, consolidation is the biggest theme. We certainly don't see fresh capital coming in. I mean, don't think anybody is going to enter the space now. So, pretty much you'll freeze the space within 3 operators, more consolidation, plus the demand for data. I think and data demand, as people consume more and more of data for everything, right, from entertainment to everything to businesses and so on. I mean, it's all about data, and so the carriers people are going to make money in the long run actually. So I think that is a broad theme the market plays, and so we don't know if it will be a good year. 18 may or may not be a great year for them, but certainly over the medium to long term, telecom firms should do well, and actually our funds have gained. I mean, we did have telecom stocks earlier this year, and that's done well for us simply because we saw consolidation playing out over the medium to long term.
we've been talking about the consumption story pretty much every single day, and Maruti's grabbed the headlines, making it to the front page of the Economic Times again today. Rajat, what does it really mean for the auto sector? Or, is Maruti's story just one of those exceptional plays which, would be compared to the likes of an HDFC Bank from the financial sector? Or do you think it can really lift sentiment across the board for the auto pack?
There are two things here. I think Indian company. India is a big market for two-wheelers and four-wheelers, or auto packs as a whole. So it's about, say, 18 million two-wheelers get sold, close to 3 million cars and UVs get sold. So it's a very, very large number. So they're very cost-efficient producers, and so I can't get into specific stocks, but clearly, say Maruti, for example, I mean, they do have a very large franchise, and because, say, you own virtually half the market, so you get disproportionate share of the benefits in terms of costing, efficiencies, all those sort of come into you. So I think it's broad, both things. It's the market itself is large, it's growing, the producers are cost efficient. India, because we have a large then auto ancillary business. So all of these things make this ecosystem a very, very efficient ecosystem. And you have a large domestic market which can help you deliver those economies of scale. So on the both supply and the demand side, I think we are very, very well positioned. So I think, yeah, you will have, markets have run up, stocks have run up very well, but something which is more secular, I think, autos. But clearly there could be disruption in the medium to long term, but not even medium, long term. Probably you have electric vehicles, you have ride sharing, all those things could come up, but that is things which are far in the future. So I think in the near term, I think auto still is something that looks interesting.
A bottom-up story that you're willing to look at, or is it does it continue to be an avoid even for 2018?
Sorry, I missed that. I'm sorry.
IT sector, Rajat, what do you think are the prospects for the sector in the next year?
Yeah. No, I think, as I said earlier, I think the global economy is doing well. US is doing well. So I think in some ways IT and stocks have not done well this year. So I think there is a space in IT, and bottom-up stock picking certainly should help in IT. Rupee, we don't think appreciates from these levels, so that should help the IT companies too. Plus, India is inherently competitive. Indian companies are well-run companies. We are competitive companies. The macro should help them. There are tailwinds in the macro globally. So IT, I think, is a space wherein, I mean, we have been underweight for a while. That's helped our portfolios, but we have reduced our underweight positions in the last couple of quarters, for example. And we did pick good bottom stock picking, and that's worked well for us. So I think IT is something that I would not avoid for 18.
Rajat, there are two things in the BFSI space. A, it's a crowded trade, and B, the fundraising which some of the BFSI companies and some of the new insurance companies has done. It is always an indication that the trade is now getting very, very one-sided. So do you think financials, they run the risk of underperforming seriously? Just about every major fund scheme or money manager is now overweight financials.
Yeah, actually, even the last time we spoke on your channel, I think, and I did say that NBFCs, while this is a very large, it's a very dispersed space. There are all kind of NBFC, right from auto financiers to microfinance to gold loans and so on and so forth. It's a very wide space. So having said that, NBFC is one space where I would be slightly cautious, simply because A, there's more capacity, the point you spoke about. There's more money has been raised, so they have more capacity, they can compete much more, and everybody wants to do that. So what happens is, when you have incremental competition coming in, while the competition itself may not survive, not everybody is going to, especially the newer ones which come in, I mean, but they'll spoil the pricing at least, or certainly have some impact on pricing for everybody in the market. So I think NBFC is something we have to be very, very cautious about, and which is in our portfolios too. So we have select NBFC, but we are not overweight on the NBFC space particularly. While we have a meaningful space to financials, both private banks, PSU banks, NBFC is something that we are slightly more cautious, simply because the points you made, more capacity, more competition, and at some point also the higher cost of funds going forward as well.
Rajat, you know, while I completely take your point that it is going to be a very stock-specific kind of story, 2018, as perhaps even 2017 has been, although the index has also run up quite a fair bit. But come 2018, would you say that one would be safer sticking with large caps, or do you think there is larger money to be made even now in the broader end of the market?
Yeah, while in the, I mean, you may see large caps, I mean, there's a catch-up trade. We have had large caps do well. I think large caps may do well. But having said that, over the next 2 to 3 years, for example, if you came into equity, I think mid cap should still do better than large caps. So potentially in 18, it's possible that large caps do as well as mid caps do. But still over the next 2 or 3 years, I think mid caps should make you more money than large caps would.
Rajat, great speaking with you. Thank you so much for taking the time out and speaking with us. And here's wishing you a very happy new year in case we don't meet again in 2017.